Welcome to March's Business Outlook press conference call. I have with me today Mike Trebbing, who's our Senior Economic Analyst, and I'm Marilyn Wimp, Manager of Media Relations. Mike Trebbing is going to be answering questions from reporters today, and we have joining us on the call Kathleen Madigan from Dow Jones. Please remember to mute your buttons during the call, except when asking questions. I'd like to turn it over to Mike, who's going to say a brief statement before we get started.
Thank you, Marilyn. Indicators from the March Business Outlook Survey suggest that conditions continue to improve in the region's manufacturing sector. Although indicators for new orders and shipments moderated from February, all of the broad indicators remain positive, indicative of improvement. The overall level of employment and average work hours among reporting firms also increased this month. Firms expect continued growth over the next 6 months, and nearly half indicated that they expect the rate of production to accelerate during the second quarter.
Thank you. We'll now take questions. Kathleen?
I noticed that the inventory index turned negative again. Do you have any idea if that the drawdown was unintended because sales were bigger, or if companies are getting back into inventory drawdown mode?
There's no telling from just the overall diffusion index, I think. We did receive a few comments this month that were, again, suggesting that some of the growth in orders were coming from stabilization of inventories or building of inventories of some of the customers. But, just from 1 month's reading of the diffusion index on inventories, it's really hard to make a judgment about that. However, as we indicated last month, the number did turn positive for the first time in some time. So, on a several-month average basis, that inventory number is suggestive still of stabilizing inventories.
Mm-hmm. Okay, thanks.
I believe we have another reporter on the line. Who joined us?
It's Ellen at Reuters.
Hi,
Hi.
Ellen. Welcome to our call.
Thank you.
We would entertain your questions now. Mike Trebbing just got started.
Are you starting with me?
So if you have any questions, Ellen.
Okay. It seems as if there might have been a little bit, the components of the index are a little bit more mixed than the headline number would imply, with orders and shipments a little weaker, although the employment picture looks a little bit better.
Right.
Forgive me if I'm repeating things you've already said.
Right, yeah, we saw like a 1-point increase in the general activity, but a slight fallback in both shipments and new orders. But in general, the trend is still positive, with positive readings on all of the broad indicators. Again, employment showing some increases on both the number of workers and average work week. So on balance, most of those broad indicators, were stronger in the first quarter than in the fourth quarter. So if you take out some of these 1-month fallbacks, there's still basically an improvement overall.
Thank you. That was Ellen Freilich from Reuters. Do we have another reporter on the call?
Hi, it's Courtney Schliserman with Bloomberg.
Hi, welcome. We're happy to take your question, Courtney, if you have one for Mike Trebbing.
I wanted to make sure I got it right on the special question. With the second part, when you talk about an acceleration in growth, is it that it's an acceleration in production growth or economic growth?
Right. We asked about specifically their plans or their expectations for production during the second quarter compared to the first quarter. Mm-hmm. And the first part of the question asked, what increase or decrease they were expecting over the first quarter. we got an average of 1.8% increase for the entire panel, with about 57% of the firms indicating that they were expecting higher production levels in the second quarter than the first, and a smaller percentage, 17%, expecting declines. And then when we asked them if that production growth rate was an acceleration or deceleration over the pace of the first quarter, we got that 48% of firms that indicated that the expectation was it was an improvement or an acceleration from the first quarter pace. And then we also asked them about whether the overall increase was due to seasonal factors or change in business conditions, and about 40% of the firms said that it was related to overall business conditions rather than just seasonal aberration.
Okay, thank you.
Do we have a follow-up, Dow Jones?
No, nothing, thanks.
Of Reuters?
Yes. Mike, about that special question about the average of 1.8% increase in the second quarter over the first quarter, that is 1.8%. It's not 1 point. I mean, that's not like adding 1.8 percentage points to GDP. It's 1.8% over the whatever the production was in the first quarter, right?
That would be a simple percent change from the levels in the first quarter. So
right. So in absolute terms, that's not that much, right?
Correct. I would not characterize that as rapid growth, especially as it relates to recovery period after a recession. And most of the comments this month did reflect the fact that the pace of growth was improving, but we heard very many comments that suggested that it was slight improvement, modest improvement, and it does bear out in the special question where 41% of the firms said it represented some acceleration, and only 7% indicated that it would be characterized as significant.
Thank you. Any follow-up, Bloomberg?
No, thank you.
Well, if there's any other questions, any other callers? If not, we thank you all for participating in our press conference call, and we'll see you again in April. That's April 15th at 10 a.m. Thank you.
Thank you.
Thank you.
Thank
for
you.
Bye.